Bitcoin ETFs are shaking up the financial world, but not everyone wins in this game of innovation. As these funds make cryptocurrency more accessible to traditional investors, they're also reshaping market dynamics. Who stands to benefit most from this trend? Are retail investors and institutions both positioned for success, or will some lose out as the crypto landscape evolves? In this video, we'll break down the latest Bitcoin ETF trends, spotlight the big winners and surprising losers, and explore what the future holds for these groundbreaking financial products. Stay tuned to uncover the shifting tides of the crypto market. Today, we will talk about Bitcoin ETF trends, winners, losers, and what's next. So before we get started, make sure to hit that like button, also subscribe to my channel. Bitcoin ETF trends, winners, losers, and what's next. Bitcoin ETFs have been one of the most talked about developments in the financial and crypto worlds. They promise to bridge the gap between traditional investing and the rapidly evolving world of digital assets. But like any major trend, Bitcoin ETFs come with their share of winners, losers, and future uncertainties. What makes Bitcoin ETFs so significant? Why are they seen as a game changer? And what does this mean for investors, institutions, and the broader cryptocurrency market? In this video, we'll break it all down. By the end, you'll understand the current trends, who's benefiting the most, who might be falling behind, and what lies ahead in this rapidly evolving space. The Bitcoin ETF boom. How did we get here? The journey toward Bitcoin ETFs has been long and fraught with regulatory hurdles. The first proposals for Bitcoin ETFs were filed years ago, with financial innovators trying to bring Bitcoin to the mainstream in a way that felt safe, accessible, and regulated. The breakthrough came in 2021 when Canada launched the world's first Bitcoin ETF. Shortly after, the United States approved Bitcoin futures ETFs, marking a pivotal moment in cryptocurrency's integration into traditional finance. These ETFs allowed investors to gain exposure to Bitcoin's price movements without needing to directly buy, store, or manage the asset themselves. Today, Bitcoin ETFs are a global phenomenon. From Europe to Asia, financial markets are witnessing a surge in interest. But the adoption and structure of these ETFs vary greatly, with futures ETFs dominating in the US while spot ETFs gain traction in other regions. What exactly is a Bitcoin ETF? Before diving into the trends, let's quickly recap what Bitcoin ETFs are and why they matter. A Bitcoin ETF is an exchange-traded fund designed to track the price of Bitcoin. Instead of directly buying Bitcoin, investors can buy shares in the ETF, which are traded on stock exchanges like traditional stocks. The ETF can be structured in two main ways. Futures-based ETFs. These ETFs invest in Bitcoin futures contracts rather than the cryptocurrency itself. This allows for price tracking without holding physical Bitcoin. Spot ETFs. These ETFs directly hold Bitcoin, offering a purer exposure to the asset's price movements. Spot ETFs are considered more straightforward, but are currently not approved in the US due to regulatory concerns. Bitcoin ETFs make investing in cryptocurrency easier for traditional investors by removing barriers like wallet setup, private keys, and custody challenges. But this accessibility also brings challenges, creating clear winners and losers in the market. Who are the winners? 1. Institutional investors. For years, institutional investors were hesitant to enter the cryptocurrency market due to its volatility, regulatory ambiguity, and technical barriers. Bitcoin ETFs have changed this. ETFs provide a regulated, familiar vehicle for institutions to gain exposure to Bitcoin. Hedge funds, mutual funds, and pension funds now have a way to invest without navigating the complexities of direct crypto ownership. This has unleashed billions of dollars into the market, contributing to Bitcoin's growing legitimacy as an asset class. 2. ETF issuers. Companies that have successfully launched Bitcoin ETFs are clear winners. Firms like ProShares, Grayscale, and Purpose Investments have become household names in the crypto investment space. These companies have attracted massive assets under management, generating significant profits from fees, while solidifying their positions as leaders in financial innovation. 3. Retail investors. Retail investors also benefit from Bitcoin ETFs, particularly those who were previously intimidated by the technicalities of crypto. With ETFs, they can easily gain exposure to Bitcoin through their existing brokerage accounts, making the process as simple as buying shares of a stock. 4. The broader cryptocurrency ecosystem. Bitcoin ETFs have brought legitimacy to the cryptocurrency market, drawing in new participants and increasing demand. This broader adoption benefits not just Bitcoin, but the entire ecosystem, as more people explore other cryptocurrencies, blockchain projects, and decentralized finance (DeFi) opportunities. Who are the losers? 1. Crypto exchanges. Traditional crypto exchanges like Coinbase, Binance, and Kraken are feeling the heat. With ETFs offering a more accessible entry point for investors, these exchanges risk losing retail customers who prefer the simplicity of ETFs. Smaller exchanges, in particular, may struggle to compete. 2. Bitcoin maximalists. Bitcoin maximalists, those who champion Bitcoin's original vision of decentralization and independence from traditional finance, are skeptical of ETFs. They argue that these financial products concentrate power in the hands of institutions, undermining Bitcoin's decentralized ethos. 3. Smaller crypto projects. As Bitcoin ETFs attract institutional capital, smaller cryptocurrencies and blockchain projects may struggle to gain attention. This could create a more centralized market, with Bitcoin dominating at the expense of smaller, innovative projects. 4. Early adopters. Ironically, some early Bitcoin adopters see the ETF trend as a double-edged sword. While it boosts Bitcoin's price and adoption, it also invites increased regulation and scrutiny, potentially limiting the freedoms that attracted them to crypto in the first place. Emerging trends in the Bitcoin ETF space. 1. The push for spot ETFs. Spot ETFs are seen as the holy grail of Bitcoin investing. Unlike futures-based ETFs, spot ETFs directly hold Bitcoin, offering a truer reflection of the asset's price. While they are already available in Canada and Europe, U.S. regulators have yet to approve them. The demand for spot ETFs is growing, with major players like Grayscale and BlackRock leading the charge. Their approval could revolutionize the market, unlocking even greater institutional investment. 2. Fee compression. As competition among ETF providers increases, fees are coming down. This is great news for investors, as lower fees make ETFs more cost-effective. However, it also means that issuers must find new ways to differentiate themselves and maintain profitability. 3. Geographic expansion. Bitcoin ETFs are no longer confined to North America. Europe, Asia, and Latin America are emerging as significant markets, with countries like Brazil and Hong Kong exploring their own products. This global expansion is increasing liquidity and driving innovation. 4. Diversification beyond Bitcoin. While Bitcoin remains the primary focus, ETF providers are already exploring funds tied to Ethereum and other cryptocurrencies. This diversification could open the door to a new wave of crypto investment products, broadening the market's appeal. What's next for Bitcoin ETFs? 1. U.S. spot ETF approval. The approval of a spot Bitcoin ETF in the U.S. would be a game-changer. Analysts predict that such a product could attract billions of dollars in new investment, significantly boosting Bitcoin's price and market cap. 2. Integration with traditional portfolios. As Bitcoin ETFs gain traction, they are increasingly being integrated into traditional portfolios. Financial advisors are recommending them as part of a diversified strategy, which could drive further adoption among retail and institutional investors alike. 3. Tokenized ETFs and DeFi integration. The rise of blockchain technology has led to the concept of tokenized ETFs, which combine the benefits of ETFs with the advantages of decentralized finance. These products could represent the next frontier in crypto investing, offering greater flexibility and transparency. The ripple effects on the crypto market. Bitcoin ETFs are reshaping the crypto market in profound ways. They are increasing liquidity, broadening adoption, and enhancing the market's credibility. But they are also introducing new challenges, from increased regulation to the potential centralization of power among financial institutions. For investors, staying informed about these trends is crucial. Bitcoin ETFs offer exciting opportunities, but they also come with risks. Understanding these dynamics can help you make smarter, more informed decisions in this rapidly changing landscape. Bitcoin ETFs represent a turning point for cryptocurrency. They have the potential to bring Bitcoin to the masses, driving adoption and innovation in ways we've never seen before. But with every opportunity comes challenges, and it's essential to navigate these waters carefully. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.